Anticipation. That's our topic for today's Backstage Pass. Well, stocks are lower so far this morning, and mortgage bonds are down as well. It means mortgage rates are going to open up a little bit worse than where they closed from yesterday. We'll talk more about that in just a minute, but our topic for today is CPI, Consumer Price Index, and the markets collectively are kind of holding their breath in anticipation of what is going to come out, what that data is actually going to look like for CPI. Now, CPI data is released for the month previous, and so if you remember back in the month of June, we had the May CPI data that came out, and when that data came out, the markets, it was hotter than expected, and the markets, the bond markets reacted negatively. We saw the bond markets, mortgage bonds drop very dramatically. We saw mortgage rates go up and kind of spike and hit their peak. Ever since then, it's slowly been starting to come back down. Mortgage rates have started to come back down. Mortgage bonds have started to gain some ground. We had the Fed rate hike in the month of June. We also had another Fed rate hike in the month of July. And so, mortgage bonds have been reacting positively to that. So everybody's looking to see what's going to happen and what's going to be in the data tomorrow. Now, the expectation is that the data for the month of June will be moderated or be a little bit tempered or lower than what we saw in July or for May. If that is the case, if the data comes in a little bit lower than what we saw for May, then that means that the the bond market and mortgage bonds specifically will have a positive reaction. They're going to go up in price. That means for mortgage rates, we'll see mortgage rates continue their downward trend that we've been on since about July 21st. All right. Now, opposite, if the CPI data comes in hotter than expected, what is the market going to do? Well, the market could have a knee-jerk reaction again, and bond market could react negatively. We could see mortgage bonds go down. In that case, we'll see rates go up. And if the bond market reacts very negatively, we could see rates go back to that mid-June level that we saw back in June. However, one thing that's kind of being baked into the market right now is the market's credibility or giving their credibility to the Fed. What is the market thinking the Fed is going to do? Is the Fed credible? So in the last meeting, if you remember, the Fed said, hey, we're going to play by the data now. So the data is the playbook that the Fed is following, and the markets really believe that. They believe that the Fed is going to follow the data. So what that means is that if we have a hotter than expected CPI, then the markets are expecting the Fed to be aggressive on the Fed fund rate and tightening, which is going to help combat inflation. So really right now, what we could see if we have hotter than expected inflation data tomorrow, we could see a tempered reaction based on the market's expectations that the Fed is going to do what they said they would do from their last meeting. Now, time will be the thing that tells, right? Until then, right now, mortgage bonds are down 14 basis points at the time of recording. 10-year yield is up 2 basis points. It means mortgage rates are going to open up slightly worse today than where they closed yesterday. We're in that 5.35 range yesterday with no points. We're kind of in that 5.4 range today with no points. So that's about where the market's going to open up today. And there's not a lot of news, so we don't expect a ton of volatility or repricing throughout the day today. But we'll just, as that comes, we'll let you know. For now, that's all we got. Again, collectively, we are anticipating the CPI data. As that news comes out tomorrow, we'll let you know. In the meantime, please like, comment, and subscribe. If you have any questions about the Fed or CPI data or what it means or how it affects, just any questions at all, leave them in the comments. We love to answer questions. And remember, stay positive, have a great day, and we'll see you tomorrow.